Streetz 99.3, your choice of hip hop and R&B. C-Dub is up in here, and it's about that time. Tax time! And I got my tax expert is here in the building. Ashley Brooks here with Brooks & Associates is back at it again to give us some information on how to help you save some money on your taxes. Ashley, what's going on, girl?
Hello. Thank you for having me again.
We back in here again. How you doing?
I am doing good. I'm excited about tax season.
Okay.
I know most people are not. But I'm here to answer all the questions.
Why you say that people not excited about taxes?
This is the feedback that I actually get from people. They're just like, yeah, you're excited about this. It's like when you go to the doctor. The doctor, this is there every day, but we don't look forward to going to the doctor.
Right.
When clients book that appointment, they're just like, I like you as a person, but I dread this conversation.
Oh my gosh.
So my goal, as you know, is to help educate people along the process and just try to simplify it as much as possible.
Boom. Yeah. There it is, man. I had a couple of people hit me up, slid in my DMs. Yeah. It's that time. And I said, you know what? Let me bring my girl Ashley in here. Let's get these questions answered.
Get the questions answered.
So let's kick it out. What are the most common mistakes that people do when filing their taxes?
So the first step is, and I keep it very simple, right? If you have a simple return, just the W-2, you can file that yourself. But
really?
Once because it's just taking the document and putting it onto the return.
Okay.
That's it. But once you start having multiple W-2s, you are married, you have kids, you have a side business, that makes your return more complex. And it's funny because I've been seeing a lot more clients, they're reaching out to me, coming on board because they were handling it themselves and they're getting notices. So some of the common issues, that I'm seeing is not reporting all your income. I had a client recently, they were letting an accountant handle one side of their business. I'm handling the personal. I don't recommend that because in their situation, they didn't provide me everything I needed because they thought the accountant needed all the information for the business. Now they're getting notices saying they owe $10,000 plus.
Oh my God.
So in a situation like that, one, you want to make sure that you are capturing all the income. Even if you think it's small, make sure that you're reporting it because every tax document that you receive, the IRS receives a copy of it also. Other common mistakes is not getting carried away with write-offs. This is going to be for, business owners, those who have side gigs. You hear all the social media gurus saying, write everything off. That sounds great until you get an IRS notice. So you want to have documentation on everything that you're claiming as a write-off, but it needs to make sense. So the thing that I tell people, if it doesn't make sense to you, it won't make sense to the IRS. So to avoid those notices, documentation, document all your expenses. You want to make sure that you're reporting all your income. And I would say too, if you get a notice, that's the common issue is that people get scared and they act on it and they'll pay it. 9 times out of 10, it's an estimate. Right.
Because
we were talking about that. Yeah, we were talking about that earlier. You receive all this information, and if you understand it a little bit, you'll know this may not be right. Let me look into this. But the average person, they freak out. They're like, I don't want to deal with this. Let me just pay it, get it off my plate. More than likely, they're overpaying in something. This year and last year, there have been several times where clients coming on board again, they're needing a professional now. They'll get a notice. I'll look at the notice and I'm like, don't take action on it. This is just the estimate. Let's get these things filed. Once we get it filed, it's going to wipe out the estimate.
Right.
The average person doesn't know that, right? So I'm queen of examples. So I had a client came on board, and this is huge, and this is why I want to give this example. Had a client to come on board. They had been doing their own taxes because they felt it was simple, straightforward. They're professional, educated. They got it. Well, they have a business, and they were filing their returns, and I think they received a notice saying they owed $30,000. I mean, they have a wonderful business. Well, once I got the information and reviewed it, they missed one little thing in their filing that actually brought that amount down to $100 per return. That's huge. Yes. So instead of them owing $30,000, once we cleared everything up, got all the returns filed properly and accurately is key, they only owe $1,000 now. But you don't know those things. So having a professional to review any notices you receive, even when you're filing a tax return, if you're not sure, and I always say this, when in doubt, get with the professional, because if you feel it's complex for you, more than likely you're going to miss something.
Right. Yeah, I can see that. And all the different tax deductions.
Yeah,
and
it's so many things.
Because we don't, normal people don't even know about all that type of stuff, right?
Nope. And again, you have I'm looking at the camera when I say this. You have the social media gurus, and I talk to clients also that'll say, I'll go to Google or now Chat GPT, right?
Oh,
and they're researching all this information.
Get your professional.
So the thing that I always tell clients is everybody's situation is not the same, right? We're comparing apples to oranges. So that's rule number one. That's the issue. Number two, when you're looking at the social media gurus or you're looking on the Chat GPT, the Googles of the world, that information that's provided is very generic. You don't know if it's applicable to your situation or not. You're married, you have kids, so your situation is a little more complex. Your tax rate isn't going to be as high.
Somebody who's single,
no kids, and so someone will come and talk to you, and you may say, hey, I took some deductions on a business and we got this deduction for our kids, and they will think, oh, I qualify for the same thing, or they'll read it on the internet. They will file a return claiming those things, and they don't qualify. That's going to trigger the IRS. They will get a notice, and this is where it becomes tricky, because now you have to fight against that to prove
it.
Yeah, and so it just becomes a whole can of worms. So again, if you have a W-2, you can file it, but if it's anything above that, get with the professionals to make sure it's done right, because cutting corners in the short term, right, can be a headache.
Catch you on the long run.
It's going to catch you on the back end. So,
how can some small business owners maximize on their tax savings?
So for business owners, I will say, and we were talking about common things, right? So two of the common things, and I'll say three of the common things that I see business owners forget. So cell phone write-off. That is one that I see a lot of clients when they're coming on board, they're not thinking about that, because for them, that's a personal expense. But as a business owner, you're using your cell phone.
Make your sales,
right. So that's a big one. Business mileage, I'm seeing that's a common one as well. Not because people don't know about it, they don't know how to track their mileage.
What about that app? There's
there's tons of apps.
A mileage app.
Yeah, there are a ton of mileage apps. So this is where I will say use Google to figure out which application is a benefit to you. For instance, me, I use Mile IQ, but there are a ton. If you use QuickBooks, they have mileage trackers in there, but you really have a lot of them. So the biggest part is you want something that's tracking every drive, and that way you could just swipe left or right if it's personal or business. Keep it super simple. I'm not perfect, so sometimes I'm not keeping up with my mileage as a business owner either, and I told a client this to kind of let them know that they're not in this by themselves. For the whole month of January, I'm overwhelmed because I'm preparing for tax season. I wasn't keeping up with my mileage, but one day I took about 20 minutes. I went through all of my drives for January, updated them. I'm done. So they're tracked for January just like that because I have the mileage app. So a lot of people, they won't have the mileage app, or they're not tracking it. At least if you have it, you can always go back and update it, right? It's easier to do that versus trying to estimate at the end of the year what was your mileage for the year. So that's a headache, and a lot of people would say just forget about it, but that's a huge deduction.
Oh yeah, most definitely.
Huge deduction. And then I'll say the third one is your home office. A lot of us are working from home now, and a lot of people are forgetting about all those expenses that go into a home office deduction. So whether you are renting or you own a home, you can get a portion of that expense, right? Some of the other ones are electricity. You got to pay an electric bill. We all do. Your water bill, your gas bill, your alarm system, the repairs that you may make to your home. If you own your home, those are deductions that are included in the home office. And so the thing that I would say, when you hear the home office deduction, it's not a dollar for dollar. So let's just say your mortgage interest, you paid $5,000 for the year. You don't get a $5,000 deduction, right? A lot of, and again, this is where the gurus will come in and say, claim, this home office deduction. It's a percentage of your home office space that you get to deduct.
Okay.
But this is where the professional comes into play, because again, I can say take the home office deduction, but you really need to know the details of what does that look like for you.
Right.
Yeah.
Okay.
So, Yeah.
So what is the difference between tax deductions, tax credit, and why does all that kind of matter?
It matters because when we think about tax deductions, that is a dollar for dollar deduction of your taxable income.
Okay.
So for instance, everybody pushes 401k, whether you have, for your job, and then if you are working for yourself, it could be a traditional IRA. So if you contribute to that, that's considered a pre-tax vehicle, right? The more money you put into that vehicle, you reduce your taxable income by that exact amount. So if I put in $5,000, I get a $5,000 reduction in my taxable income. The lower your taxable income, the less tax you have to pay. Right? So your 401k, traditional IRA, health savings account is another one that people are familiar with, but they may not be taking advantage of. So for my individuals that have high deductible insurance plans, if you have a lot of medical bills, you're paying a lot of out of pocket, you want to get a health savings account. It's a dollar for dollar also, similar to the 401k. Okay. So, and I just had this conversation with someone. They have an accountant, but their accountant didn't share this information with them. I looked it up for them. Because they have a family, they're able to contribute $8,300 this year to their HSA. That reduces their taxable income by $8,000. That's huge because they're already paying for medical bills, right? But at least let me put this money into this pre-tax vehicle. Let me get a tax deduction for it. You. So that's an $8,000 savings from a tax deduction standpoint. Now, when we talk about tax credits, think about for those individuals that may be going to college with credits. Some of it is dollar for dollar, similar to the deduction. Some of them are not. This is where it gets a little tricky. I don't want to get too technical. I'll just say for credits, you have refundable credits and non-refundable credits. So the refundable credits, that reduces your after-tax income. So whatever income that you're going to be taxed on after all your deductions, it'll reduce it even more. So think about the child tax credit. You have kids. Everybody, as long as your child is 17 or under, is $2,000 per child. So you have your income that's being taxed now. So that credit will reduce that tax amount by $2,000. Okay. Then you have non-refundable credit. Well, that's a portion of that is non-refundable. And then the credits that are refundable, once you get your tax down, let's say to zero, if it's non-refundable and you have a little credit left, you don't get that. But if it's refundable, even if your tax gets to zero, you still will get that. So think about earned income credit. That's a refundable credit. That's going to be more for lower income families, right? And you'll hear like a lot of people, I got a big refund. Depending on where their income falls, it's their earned income credit that they get. So they were able to get their tax down to zero. They still have this credit, but now they get that credit as a part of their refund because it's a refundable credit. Right. So again, that makes sense. I'm saying a mouthful, to be honest with you, and this is the technical side of tax, but it's important to understand these things because when you're working with a professional, they should be able to tell you, hey, these are some of the things that you qualify for, i.e. 401k. Make sure you maximize that if you can. Hey, let's look at the HSA to get your taxable income down. But then let's look at those credits. Let's look at even my clients, when we're preparing for taxes, they'll forget to send me their summer camp or their aftercare expenses. That's a part of the non-refundable credit piece.
All that goes in there too?
Yeah. But a lot of people forget that. So if you're working with a professional, you want somebody that's thorough. Yeah, you know your taxes. You do this every year, so you'll send the information. But what about if you forgot something, right? When I talk to clients, they'll say, oh, I purchased a car. If they're itemizing, they get to claim sales tax on that vehicle. That is one that a lot of people don't talk about. Okay. So there are a number of things. So if you're working with a professional and you're talking to them throughout the year, you're having these conversations. I'll laugh because some of my clients that I do have personal relationships with them. So when we're just kind of talking outside of tax season, they'll say, I purchased a home. I moved. I bought a car, and I'm just tracking it in my head. And I said, okay, I'm putting the accounting hat on. I need all this information because some of these things are going to be tax deductions for you.
Right.
They're not thinking about it because it's just a, natural course of business for them. But that's the benefit of having a professional, because something you may forget, we're going to make sure that it's documented, because the goal is you want to maximize tax deductions as much as possible. To reduce. I mean, if we have to pay tax, we don't want to pay a over amount. We want to pay what we're supposed to and keep the rest in our pocket.
Ashley is here, man, getting a spitting game on these taxes, man. If y'all need some tax benefits and somebody to look at your stuff, she is here, and we're going to get all her information at the end. But let's just keep going. How does a side hustle or a freelancer impact somebody's taxes? Somebody slid in my DMs on this one.
So I would say the biggest red flag people don't understand is if you have a side gig, even if you are starting a business and it's in the beginning stages, if you are making a profit. So to keep that simple, your income minus your expenses. If it's a positive, you've made money off of that side hustle, right?
Let me interject.
Okay.
Okay. I got what you're saying.
Yeah.
I want to break it down to
break
some people.
It down.
Let's break it down. Okay, so what do prospects or future clients do if somebody who's listening who got a side hustle and they got a Cash App, they got a Venmo, what else they got?
PayPal,
like all that stuff is not going like into your bank account. So what would you say for somebody like that? With this question is the side hustle. How does that impact?
So how do they get? So 2 parts, right?
So I know a lot of people like I ain't finna track that.
Well, okay. Look, now you're gonna make me say 3 parts.
Okay.
So first part is, again, if you made a profit, you automatically need to understand you're paying self-employment tax. So when you hear people talk about I gotta pay 30-40% in taxes because I'm a business owner, that's a part of it. Self-employment tax is 15.3% of your profit. Got to understand that, because people think I made money, like you said, I don't have to pay tax on this money. Any tax document that goes to the IRS, they're looking for you to report their income. So that's the first part. So you mentioned the third-party providers, the Cash Apps, the PayPals, the Venmo, etc. So all of those, and that's the third part I'm going to get to. But what I typically tell clients when they're coming on board, pull those reports. Let's go ahead and claim that income that they reported, but let's not forget about those expenses that are associated with that business. So again, business mileage, any advertising, marketing, if you pay someone, that's contract labor, right? If you pay office supplies, if you had shipping costs, if you had, professional development, people forget about that one. If you pay for continued education, subscriptions, all of these things are going to help to reduce their income. Now, you said it, some people are using the Cash Apps and the PayPals. They don't transfer that money to their bank account. They keep that balance, right? So that's fine, but this is where you want to pull those reports. I recommend to just transfer that money into your bank account. Keep it simple. If you transfer that money, you got a paper trail. You can download that information, and it's easy to gather that, organize it, and give it to your tax professional. Even the clients that I work with, my clients, they're trying to make it easy. And they're like, I'm gathering all this information. No, have it all go to your bank account. Let's download that into a spreadsheet. Let's organize it. Keep it simple. That saves you time and stress. Now, third part that you just mentioned was those PayPal, Cash App, all those providers, right? So there was a big push last year with the 1099K. If whoever receives money in those third-party providers, they're going to get a tax form. Everybody freaked out, right? Because a lot of people use those for personal and for business.
Right.
And they're like, what do we do? Because I don't want to be taxed on income that's really personal. So the biggest part is going into this year. So they were saying that they were going to submit this form if you made $600 or more. They've moved that back. So if you made $2,500 or more, you will get a 1099K form, and it's up to you to report that. Even if it's personal, you want to report that, and you can properly reflect that is personal and should not be taxed. This is where a professional comes into play, though, because how would you know that?
Right.
You'll get a tax form, you'll file it, but that's really personal income for you. Okay. So I would say those 3 things for, small business owners. If you have a side gig, 1, you want to pull those Cash App, PayPal reports if you are leaving a balance on that account. If you're automatically transferring that money over, you should be able to pull a spreadsheet from your bank account, and it's going to show it. It's going to show your PayPal deposits, Cash App deposits, etc. Right. Yeah. Second part is you report that income, but now you want to report the expenses to bring that income down, right? Okay. We want to show the net profit or the net loss. Other part, people will say, well, I didn't make any money this year. I don't have anything to report. I get that a lot. Because I know some of them, I'm like, well, hold on. You may not have made any income, but you have expenses. We want to report those expenses because it still brings down your taxable income on other money you may have made from your job, from your investments or whatever. So don't think about, I didn't really have a business because I didn't make any money. Those expenses still need to be reported because that helps to bring down your taxable income. And thirdly, if you're getting a 1099K, that's the new form for that Cash App, PayPal. You want to report that because the IRS is going to look for it, but you have to know how to properly report it, especially if it's really personal money. And they're kind of cutting down on that this year, but they're going to go into effect with the 600 eventually, and that's going to affect more people. So that's a huge one.
We got some new things coming out of the pipe. 2,500 on your Cash App.
Yeah.
So you send me a Cash App. You better put something in the notes right there.
Personal.
Saying what are some other key factors, some changes that you're seeing for the new tax season this year?
So I would say this, we got a new administration in office. Okay. So, once
I know it's some new stuff in there.
Well, it's some new stuff, but it's for the wealthy. It's more advantageous for them. So that's kind of the downside. A lot of people that are asking me questions, they don't fall within that income bracket, right? So this is the thing that I want to point out. The current tax law that we're under, this is from the Trump administration of 2017. Okay. So the tax laws from that time to now are supposed to expire 2025. Okay. This was purposeful. So once they expire, we are going to have new tax laws going into 2026. There, it's a lot of executive orders and things going on right now. So taxes is not at the top of the list, but I'm expecting for them to revisit this in the summertime. And this is when you'll start hearing more about the bills that are being passed. So I'll say this in short. Most of the tax changes that they're planning to implement are going to affect the millionaires, the billionaires, business owners. They'll probably get a lower corporate tax rate. So right now it's 21%. If the tax law expires, they could go back up, but they're expecting for that to go back down to 20%. So think about C corporations. But how many people do you know that have a C corporation? Right? Most people honestly have a single member LLC or a sole proprietorship. So they're not really going to see the benefit of that. Now, I will say some of the tax laws for business owners are probably going to stay in place. One that you may hear about is the QBI deduction, qualified business income deduction. That's something everyone gets. And this is why I laugh at the gurus, like, you'll get a QBI deduction. It's just like, every business owner actually gets this, right? So, it's not something, it's not something you get because you're special. Like, these are just things that they are doing to benefit being a business owner and encourage people to go into business for themselves. Now, the only thing that I will say that's kind of stood out to me, and it's been talks, it's not a law that's been passed yet, is they're talking about not taxing tips. So think about your service industries, your waitresses. They may not have to pay tax on their tips if they put this into law.
They're paying taxes now?
They have to pay tax on tips. Yep. So for my service industry individuals, if you look at your W-2, there is a section that says that your tips are being taxed for Social Security and Medicare and federal tax. So if you look at the W-2, understand your W-2. That's the other part I will say. People get their W-2, but you want to go and compare that and make sure that it's properly reported because it's still humans that are, and it's
clicking buttons.
Yeah, they're clicking buttons, so it can be human error. But look at that, understand that Social Security, we're not there yet, but our parents are. So people really don't know this, but Social Security is non-taxable. Okay. Until you start making other income. So if your parents are like mine, they may receive Social Security, but that's not enough. So they're working still.
Like 20 hours a week or something like that?
Yep.
Yeah.
And so you'll hear older individuals talk about, well, I may not want to work, or I have to work a certain amount of hours because it's going to affect my Social Security. So under this law, if they pass it, Social Security would not be taxable even with you making additional money.
Oh, that's
right.
good.
So that'll be a benefit, right? But again, that sounds great. But how many people is that affecting? Is that affecting the majority, or is it affecting a small number? Because right now we know that baby boomers are the ones that are, getting the Social Security right now. So it's a good thing, but when we talk about the average person, it's not really a lot of benefits that they're talking about right now. So again, these are some of the things that are coming down the pipeline. And I would say, I keep saying it purposefully, this is why it's important to have a tax professional, because we're staying up to date on the tax laws as they're coming down the pipeline. And so when you have specific questions like you're asking, we should be able to answer those, or at least be resourceful enough to know where to get that information.
What records did you say people should keep throughout the year as far as their taxes?
Yeah, and when we say that, I would say keep your information between 5 and 7 years, because the IRS is notorious for sure coming back after 3 years to say, hey, we see that you've missed filing this document, and some have even come back 5 or 7 years. So keep your information 5 to 7 years, but you want to keep your tax returns. You can keep your W-2s and 1099s, but honestly, that information is being tracked in your IRS account. So I'm going to put a disclaimer out here real quick. A lot of people that I've talked to, when I ask them if they have a IRS online account, majority of people tell me no.
I was just gonna say, what is that?
Look, he's looking at me like, I think this applies to me. So listen, you want to have your IRS online account, and all you have to do is go to irs.gov, and there's a place where you can create an account. Okay. This is important because most of your tax information is being housed there, and they house it, I want to say, for 10 years. Now, after that, it's not going to be there, but the likelihood of them coming for something after 10 years is very unlikely.
Right.
In this account, you're able to retrieve any W-2s, 1099s, any other tax documents that have been sent to you. It's going to be accessible in that portal. That's number one.
That's good.
If you ever needed a copy of your tax return that's been filed, you can get it from your online portal.
Okay.
I have so many clients, they come to me, they say, hey, I'm looking for a new accountant because my previous one has ghosted me, or I'm not sure if they filed my tax return. Or I'm reaching out to them and they won't give me a copy of my prior year's tax return. No worries. Let's go to your online account. Let's retrieve this information, and we got it, right? So less of a headache. And then the third thing I would say with the IRS online account is, if you're looking for your payment history, if you want to make a payment, if you want to set up an installment agreement for my people who owe taxes, you can do all of those things in the IRS online account. So it behooves everyone, including you.
Yeah, I'm right here right now. What you talking about? I need to look up mine right now to make sure I send it all my 1099s.
Yes, but
and make sure ain't nobody claiming extra stuff that I owe them in the system.
Yes. So it's going to be great to have that. So I say that to say it's not a lot of documents that you really have to keep, because those tax documents are going to be housed in that online account. Now, I will say, if you have a business, make sure you're keeping your receipts, make sure you're keeping your bank statements in case you need those. But again, any tax documents, they're going to be in the IRS account. Yeah. What
are the benefits in hiring a tax professional like yourself? And for people who think they can do TurboTax and QuickBooks all that type of stuff.
Yeah, so like I said, I've purposely been hitting on why it's important to hire a professional. So the biggest takeaway I will say, and I say this not for myself, but honestly from when clients come on board with me, taxes are overwhelming, so they're looking for a professional to educate them, to make the process simple, to help them to organize their documents. I have so many people, they're just like, I need to file taxes, but I'm not sure what I need together. And then I've even had, I think last year, a client that they waited until the last minute, and they're like, I'm just going to file my return and I'll come back to you to do it the right way. No.
What?
Get with yes. I have stories, guys. I have a lot of stories.
We got to come back and have story
We need to have
time.
story time.
Just so you can go to the scenarios of different things that you've gone through, so people can hear it and be like, oh, that relates to me. Or, oh, my cousin had that. You know what, girl? You need to go call Ashley.
Seriously,
you just never know the situation.
Yeah, and I would say this, like, no one should feel guilty. We're all human. And I say that all the time. We're all human. We're not perfect. When I tell people there are clients that have not filed taxes in 3, 5, 10 years, they're shocked by that. But everybody has things going on, right? But it's going to come a time where you have to file. It could be that your bank needs a tax return because you're trying to purchase a home. You're trying to get a loan for your business. You're trying to refi your house. You're trying to get a grant for your business. These are times where, okay, I need to get with a professional because I'm trying to do things the right way, right? I want to have everything documented properly. So having that professional to make sure that you have your documents in order is key. But I will say this, don't wait until the last minute, right? Because when you wait until the last minute, it's going to be costly, but then you're going to be up against time. We're in February right now. One thing that I've realized is clients are starting to look for homes right now. They are not talking to their tax professional. But when it's time for it to go to the underwriter, and the underwriter is saying, hey, I need 2 years tax returns. If you're a business, I need your profit and loss statement.
Yeah, they want you to jump through hurdles and hurry up and get it. Because I'm trying to close. I'm trying to close, Ashley. Where are my papers?
Yes, and it happens, right? Yeah. But this is where I will say, have a professional. Talk to them throughout the year. So don't make it a situation where you only talk to your professional one time a year. Keep them updated on the things that you have going on so they can make sure that you have the information you need. And let me say this too. For individuals who are thinking about starting a business, I love the LegalZooms and all the third-party, applications, but sometimes it misses information. And I've had clients to miss out on banking opportunities because they went with these third-party providers or they've done it themselves. Information has to match. So when you ask the question, why do you need a professional is making sure all of your things are in order. So when opportunities come up, you're ready for them, right? In this situation, the EIN information didn't match the information with the Secretary of State.
What?
The bank said, nope, we can't take it. So now as a professional, we have to go gather information, research it a little bit, send a letter to the IRS. So now something as simple as, hey, here's my information, I'm applying for a loan, has become very complex.
Wow.
Right? So if you don't want to delay anything, get with the professional, make sure that your things are done accurately and correctly.
She look like us too, y'all. I trust her. What's some advice you can give to somebody who's facing an audit?
For an audit, so I would, again, don't take action once you receive the notice. You definitely need to seek out a professional so you can understand what they're looking for and what they're asking for, right? And I've helped clients and I've assisted them with audits. The biggest part is you want to respond. What I have seen is that clients will get those notices and they'll just put it off. They'll take that mail and push it to the side. The IRS will send another notice and another notice. And the client would not act until it says we are taking a lien out on your assets. And it's like, oh my God, okay, now I want to take action. So the first thing is if you're getting a letter from the IRS for an audit, you want to read it. You want to act quickly because they're looking for a response. 9 times out of 10, they just want you to provide supplemental information. So you asked me the question earlier, what documentation do you need to keep for a certain number of years. This is why it's important, because if you're audited, they will come back and ask for receipts. They will come back and ask for bank statements, or they want to see, how did you report that income? So when it comes to an audit, you want to be able to show all the information that's reported on the return. I had a client, and again, I really have true stories. I had a client recently, they received a notice, not necessarily that they were going to be audited, but the IRS came back and said, hey, we see that you're missing some 1099s. You owe, again, this $10,000 because you didn't report 180 plus thousand in income. Well, guess what? It really wasn't something for them to act on because they actually did report it. They just reported it through their business. So again, if you get with a professional on an audit, you want to make sure you're gathering all the information that the IRS is asking for, and you want to respond. More than likely, that information will need to be mailed in, but sometimes you can call to inquire what they're specifically looking for, and then you can also request that they put a hold on your account. That is big. If you are in a time-sensitive situation or you've missed those deadlines, just call the IRS, ask for an extension, ask for them to put a hold and let them know you're working on it. It's better to reach out to the IRS to give them a heads up than to ignore. Yeah, because you ignore, they're not going to be lenient on you.
We done sent you more letters and you ain't did nothing.
You
we
haven't
called
done
that
a
number
thing.
and you keep hitting the ignore button thinking we spam. We ain't no spam. The IRS. Ashley is here, man. Ashley, give us some information for anybody that want to, get down and reach out to you, get some consultation, and move forward, even get you to do some bookkeeping service. Yeah.
So I will say this. So if you have questions, even if you're preparing your own taxes, you're doing your own bookkeeping, you have an accountant, I'm big on tax education, so if you have specific questions, feel free to reach out to us. The website is www.baataxconsulting.com. There you can find an overview of our services. You can also schedule a consultation, and we have a variety of consultations. You can do an initial tax consultation. If you have questions about your business, we can also schedule time to discuss that. And we're active on all platforms also. So Tax, TAXBAWSE, Tax Boss is where you can find me on all social media platforms.
There's Ashley. Thank you for coming through again. That website is BAA Tax Consulting. All right, as Brooks and Associates. In case you like, how many A's is it? BAATaxConsulting.com. Thank you again, Ashley, for coming through, giving us information about our taxes, getting us prepared.
Yes.
I'm finna go on here and check and make sure my 1099 is right.
IRS account.
You know what I'm saying? So before we get out of here, what would you say to somebody who's listening and watching right now? They're stuck and they keep putting their taxes out, knowing they need to do it.
Yes.
But they like, I can do it myself. I can do it myself. What would you tell somebody right now that's sitting in that predicament?
Just simply schedule a consultation. Even if it's something that you can possibly prepare yourself, get your questions asked. There's no dumb question. I have actually met with clients and I've given them enough information to where they felt comfortable preparing the return themselves. And then there's been situations where we've uncovered other things in that discussion to where it's like, okay, I do need to hire you. You mentioned bookkeeping earlier. That is a huge one. So I have a lot of business owners, they will say, I can handle this myself. But then on April the 13th,
oh my God,
they're like,
the walls come tumbling down on them.
And they're like, I need your help. So I would say don't wait until the last minute. For my business owners, if you are needing bookkeeping services, you have bookkeeping questions, we actually offer QuickBooks training and QuickBooks review. Okay. So the reviews, if you want to handle it yourself, we will do a review just to kind of give you an overview of recommendations to clean up the books. But if you want us to take it over, we can do cleanup for you also. And then I will say this, for individuals who owe taxes, we have tax strategy sessions. So our goal is to help you to be proactive, right? Not retroactive and you're just paying tax as it comes, but let's identify tax strategies that work to your benefit. We're not giving generic information, but we're really applying a strategy based on your situation. So we have a number of things, to be honest with you. So again, I would say check out the website at BAATaxConsulting.com just to get an overview of the services. But if you have have any questions about your situation, you are feeling guilt right now because you're putting it off, figure out why you're putting it off, but let's get the questions answered. Don't wait until April 15th. And I will say, if you are waiting until April 15th, go ahead and file an extension. File an extension. We talk about common issues. The number one common issue or misconception with filing an extension is that I filed an extension, I'm not going to be penalized. That's not the case.
Oh,
that's not the case.
I definitely got to bring you back in here to hear more of these stories.
Let me say this part. If you are filing an extension, if you owed in the prior year, make a payment. Make a payment. If you file an extension, you will not be penalized for filing your return by October 15th, but you will be penalized for not paying your taxes. So failure to file and failure to pay, they're two different things. The extension covers you on filing your return later, but you're still going to be penalized from April 15th until you pay your taxes in full. So there you go.
She's thebomb.com. That's why she's our tax expert here on the show today. Thank you again, Ashley, for coming through and giving us information about our taxes. And we'll see you again.
Yes.
I would say next year around this time, but we need to come back and hear some more stories so we can help people get them prepared before April.
Before April 15th.
So yes. Come like April
I was
going to
say March the 28th is the date for me. If you have not done anything by March the 28th, file an extension. File an extension, schedule a consultation, and let's get you together so you can file then by October 15th. Because if you don't file by October the 15th, the penalties are astronomical.
Them astronomical, like them eggs that we got over there.
Yes.
Astronomical. I don't want you to be in that predicament. Ashley, again, thank you for being here. Ashley and Brooks and Associates.
Thank you.
We out of here. Holla.